The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Good morning, everybody. You're watching Squawk Box. I can't promise you a calmer week than last week, but I can promise you a pretty entertaining 15 hours of Squawk Box over the course of the week. I'm Steve Sedgwick, and these are your headlines. So the president-elect, Donald Trump, wins Arizona, completing a clean sweep of the battleground states. Republicans now closing in on control of the House and a clear mandate to push through Trump's agenda. Market bulls basking in the prospect of looser regulation and tax cuts, with the Dow and the S&P 500 clinching their best week of the year. Meanwhile, Bitcoin surges to over $80,000 as the Trump trade takes hold. And the Chinese consumer inflation, actually though, hitting its lowest level in 4 months, whilst factory gate deflation deepens despite stepped up stimulus measures. And over in Germany, the Chancellor Olaf Scholz, well, apparently now he is open to moving up a parliamentary confidence vote, potentially paving the way for snap elections sooner rather than later.
If everyone sees it that way, then it's not a problem for me to hold a vote of confidence before Christmas.
So of all the trades out there as well, I think one of the most comical is the VIX in many ways. We talked about it before the election, you'll remember this, where we thought, okay, it's elevated. It was around about 2021. And then after the election, it will come off because it always does after major events. That's just kind of how volatility works as well. And yet when you've seen the move to the upside in these markets, actually hanging on to that VIX, you would have made what's called your gamma. You would have done well. But the point I'm making here is, if you think the volatility has ended because we've had the election, forget it. This is going to be a roller coaster, 4 years and a couple of months on the side until the inauguration as well. But we're here to hold your hand through it. And with that in mind, I've got a fixed income specialist coming up in a couple of minutes' time. So let's get to the headlines. As I'm sure you're aware, President-elect Donald Trump has won the state of Arizona and its 11 electoral votes. NBC News projects Trump narrowly lost the state to President Biden in 2020. That victory completes a sweep of all 7 key battleground states. They didn't turn out to be battleground states in the end, did it? Clean sweep for the president-elect and the 6th state that Trump has flipped from his loss to President Biden in 2020. The overall electoral college result sees President-elect Trump on 312. That's finishing well ahead of the Democratic rival Kamala Harris on 226. Now, we're still awaiting the final result in the House of Representatives, with NBC News not yet actually able to project the control of the chamber, despite the fact I inadvertently did it myself on Friday. But anyway, we can't project yet. That was last week. Forget about that. The Republican Party needs 5 more seats to secure a majority and a clean sweep of control in Congress. And if and when that does happen, I can assure you, I can tell you then I will say, well, I saw it happening because I called it last week by mistake. Anyway, let us move on. Minneapolis Fed President Neil Kashkari says President-elect Trump's tariff proposals could have an impact on inflation if other countries respond. But a one-off move would not have a long-term effect. Interesting. Speaking to CBS, Kashkari also said proposals for deportations would likely disrupt some businesses. We're going to hear from a slew of Fed speakers this week amid questions about President-elect Trump and the future of the central bank's independence. But what is really interesting is, I've been saying to you for days and weeks, let's be honest about it, we hear way too much from Fed members, voters and non-voters who basically replicate very, very similar lines and, quite frankly, just fill up too much airspace, given they don't say a lot. I think Fed speakers now get very interesting because they are going to be asked time and time again about the ramifications of President-elect Trump, of various of his policies. This is going to get much more interesting, I can assure you. So, ex-owner and Tesla CEO Elon Musk appeared to endorse calls for the White House to have control over US monetary policy. It's amazing the views that Mr. Musk has on a whole variety of issues. Why do we need politicians when we've got Mr. Musk, I say? Musk replied with a 100 emoji with 100 emoji to a post. Well, to a Republican Senator Mike Lee post saying that the president should have control of the Fed and the entire executive branch of government using the hashtag #EndTheFed. Well, there you go. Sylvia, these US markets, why don't you tell us a little bit about them? Nice to see you, but how are you? More importantly from the
Very
markets,
good.
did you have a nice weekend?
I had a great weekend. How
What
about
did you get up to? Anything exciting?
Maybe not exciting, but just like take it easy because
Like
we
a
had such an
duvet
eventful
weekend.
week last week. Do you remember?
One or two things happened a week.
One or two things.
May have been,
but in fact,
slightly
those
sidelined.
one or two things, Steve, actually had a huge impact in the market. So let me run you through what has happened on Friday, and also I'll take you through the week-to-date performance too in a moment, though. However, to start with, let's get a check on what happened on Friday. Just to give you an idea, we saw all the three major indices up and hitting record highs, the Dow, S&P, and Nasdaq as well. All of this, though, because there's been a lot of bullishness in terms of U.S. stocks in the wake of the re-election of Donald Trump as the next president of the United States. Investors very much focus on potential tax cuts as well as changes to regulations, too, that they believe could be business friendly. So let me take you to the week-to-date performance because that gives us a very good indication in terms of what happened, really, how investors reacted to the re-election of Donald Trump. Week to date, Dow was gained 4.6%. Thinking about the S&P was up also more than 4%, and the Nasdaq ended the week up 5.74%. So very strong gains here, and these were actually across the board. The Russell 2K, so the small and medium cap index, also gained 8.57% on the week. So strong gains here. Let's also get a check on the dollar crosses too to understand what has happened in the currency space. We continue to see a little bit of strength when it comes to the US dollar. Last week, though, the dollar index was up 0.4% on Friday, so continue to register this strength for the greenback. And indeed, looking at some of the performances at this stage, dollar continues to move higher against the Japanese yen, up about 0.6%. I also want to tell you about cryptocurrency because we are looking at some significant moves in this space. So Bitcoin has crossed over the $80,000 mark. Earlier, in the Asian session actually hit the $81,000 mark. This as investors are still digesting the re-election of Donald Trump, and they believe that the new president will be good for the crypto world. Let's briefly check also how treasuries performed on Friday. Thinking about the bond market, let's not forget today is Veterans Day, so the bond market will be closed stateside. But indeed, on Friday, we did see the spreads narrowing, and indeed, the 10-year note actually hit 4.3% on Friday. Steve.
Yeah, 4.3%, but a long way away from some of those levels that some of the bearish fund managers are telling us we're going to get to on the underlying, but bullish on the yield. Thank you very much indeed for that. Noah Wise is fixed income portfolio manager at Allspring. Noah, we could do a whole show asking you your opinions, given everything that's happened as well. Why don't you give me just a round robin of what you think the key implications of the seismic political events of last week are for your world?
Absolutely. So the biggest thing to understand is that growth is already on a pretty good trajectory, and inflation has been gradually moving towards the Fed's target.
Yep.
That's where we're starting from. The question now is, what does this mean for the market here moving forward? Our view is that the growth trends largely remain in place. Inflation is the big question mark.
Right. Okay. So let me go straight back to that point I've raised already in the show, that there are those in the bond market who think that at 4.3%, we are way underestimating the inflation impact of a Trump presidency as well. And actually that the US Treasury curve across the board should be a lot higher yield and a lot lower underlying. What are your thoughts on that?
I think the market really understands that the rhetoric that's coming from the president-elect is oftentimes a lot more aggressive than the actual policy that eventually gets implemented. And so I think the market's correct in that it's looking through a lot of this noise and digesting and pricing some of these trends that are already in place.
That's not just a question of some of those bond vigilantes, the $1 trillion short on treasuries. That's not just some of that being forced out of the market in the aftermath, and actually the longer term trade for being underwhelmingly or underperforming in the bond market. That's not still intact, you don't think?
No, I think that the big issues are where is growth going to be over the medium term?
Not the big issue being how much paper is going to be needed to issue to underwrite the spending plans of politicians who have already, under Democrats, built up big deficits, let alone under what Mr. Trump is promising.
Exactly. Those deficit trends that are already in place, they're likely going to be continuing moving forward. So the market's been digesting these issues. I think now it's fine-tuning. It's a question of where do you have to put the risk premium in that those deficits. So the curve, I think you have to look at the curve shape.
Right, and just and be lighter in terms of your holdings on the medium to long end?
Exactly.
What about an outright short on the long end, given the fact that we're talking about deficits already in the region of 6% on a federal basis, which could actually expand to, under some estimates, double that?
And that's where we would push back. We don't see deficits really moving to those types of extreme levels. Again, the rhetoric is more aggressive than what we would anticipate is likely to get implemented. And therefore, you probably need a little bit more of a term premium further out the curve.
Yep.
But I don't know that you need to be outright short at these levels. And part of the reason for that is what is the alternative? You have to look around and take a look at relative value across the globe. And I think that you'll continue to see that there are a lot of buyers for fixed income.
Yeah, but I can't eat relative performance. No, that's my problem. I can't eat relative tins of beans. I need real performance. And whilst I agree with you, I look around the world and I think, where the hell am I going to put my money? If in these scenarios as well, if I had any, that is. But so I look at the French, I look at the Germans, potentially I look at the British, I look at the Chinese, I look at the Japanese. Everywhere I look, I see deficits building or debt rules easing somewhat as well. The truth is, I hear what you're saying about the relative performance, but actually the outright performance, am I going to make money from owning treasuries in the long term?
I think at these levels you will. These are still pretty attractive levels. When you look at overall inflation trends, we'd anticipate that they continue to be favorable. And that's going to lead to, ultimately, we think, positive real returns for fixed income investors at these levels.
Fair enough. You've got some trades here as well. So just tell us where you think the specific opportunities are.
Yeah, I think if you look at the market, there are challenges. I think the biggest issue is in the government bond markets. Right. So there is a good reason to have this discussion, this conversation, because there is risk in those areas. What you want is a more diversified portfolio that is not only just to government bonds. I think you want to take a global perspective, both in emerging and developed markets. So there's opportunities that we see in places like South Africa and places like Indonesia, where we think the fundamentals are relatively favorable. There's some potential positive catalysts in places like South Africa that can lead to good results.
Let me ask you about South Africa. I just spoke to a very good friend of mine. I had a lunch in the city. I don't normally have those. Over a fine Indian cuisine on Friday with a couple of Southern Africans, and they think that South Africa is looking disastrous at the moment in terms of its economic performance, the inflationary concerns, its social breakdown as well. You don't see problems in owning South African paper at the moment?
So I think that all of those issues are very legitimate, right? The challenges historically are very meaningful. The question is, where are things going to be going here moving forward? I think there's actually the potential for a positive catalyst for change.
Okay, good.
You have a situation where a lot of this bad news is already in the bonds. There's a reason why they're yielding over 10%. So we do see some potential opportunity. Again, you think you want to take a diversified approach here, so you sprinkle this into a more broadly diversified portfolio.
I hear what you're saying. Where you're finding fat yield, there's a reason for those fat yields. It's just a question of dipping your toe rather than going all guns blazing. With that in mind, what about the corporate credit market as well? I know you've got some views on this as well. I mean, when I look at the Treasury market, you've heard my concerns, I mean, there are some solid medium-term, long-term concerns. But when I look at the corporate credit market, actually, I look at the higher-rated corporate credit, the double A's, the single A's, and what have you, and I think, well, actually, some of these companies, they're not going to go bust. They've got amazing cash flow. They've got solid balance sheets. Are the top-rated corporate bonds now actually safer than the top-rated treasuries?
Well, the market is certainly seeming to indicate that some of these may be, as the spreads historically usually getting some pickup relative to government bonds. That spread pickup is at historically narrow levels. So the market is certainly making that vote. They believe that corporate risk is relatively low. The valuations there, and particularly on the U.S. side, are at some of the tightest levels that we've seen in 15 years or longer.
Yeah, even at the high yield end, it's quite tight as well, isn't it? On that end, on the former junk end of the market, we call it high yield. We don't mention junk anymore. Are you being paid enough to own that stuff?
Well, I think part of the reason that junk is kind of going out of favor in terms of how it's discussed is that it's a higher quality market than it has been historically.
Yeah.
We do like the European credit market a little bit more than we like the U.S. credit market because there's some incremental spread pickup in Europe versus U.S. corporate bonds. And then the other thing that we really do like is agency mortgage-backed securities, where the relative valuations versus their own historical norms and versus the corporate credit market remain very attractive.
Now, I'm going to ask you a question, which I presume you've been asked already since the election, and you're going to get asked a lot more. What does hashtag end the Fed mean to you? Because for me, I find it quite terrifying about the ramifications to the end of independence for a 114-year institution, which by and large does a pretty good job of steering US markets through tumultuous times. What does the hashtag mean to you?
If the hashtag were to actually come to fruition, that would be very problematic. Yeah. But that's not the way that we view things. We do think that the central bank is likely to retain its independence. You've already heard Chair Powell in his most recent press conference.
I heard him say about 5 words, and that was the most angry I think I've ever seen him in those very too curt answers. Yeah.
Yeah, the Fed is very protective of their independence for a good reason.
Yeah, great. Nice to see you. I know you're on your way back to one of those formerly swing states. I don't even call them swing ones. So thank you very much indeed for joining us, and hopefully we'll see you again soon.
Thank you for having me.
Noah Wise, fixed income portfolio manager at Allspring. Well, another asset class that's surging. Bitcoin passed the $80,000 mark for the first time amid Trump's sweep of remaining electoral college votes, rising as much as 4.5% on Sunday alone. That puts the cryptocurrency's gains at more than 20% since Election Day. Crypto executives have welcomed the election result, with the Binance CEO hailing the start of a golden era. Then you can see what my prompt says here. It says, comment Bitcoin. Don't know. What do you know? Tell me about it, guys. I mean, look, the fact of the matter is, you've got Donald Trump, who I think we all agree, I don't care what political side of the equation you're from, but I think we all agree he's a transactional president. I hear that phrase a lot. He wants to do transactions that he thinks will benefit him, his administration, and the United States as well. And he appears to have changed his mind on Bitcoin, endorsing the product, endorsing potentially his own influence on it as well. Only a couple of years ago, he called it a scam. That was during his previous presidency. He called it a scam as well. So I don't know. I think, yes, it appears we're going to get less regulation. It appears we're going to get less restrictions. By and large, my understanding is, despite this extraordinary rally, a lot of the institutional money that we were told would come into Bitcoin when the ETFs were allowed, when we saw futures, when we seen other products making it easier to trade and safer to trade. I think that's a very key point as well. I think the fact of the matter is a lot of that money has stayed on the sidelines. Would it want to join the party at 80,000 when it didn't want to join it at 70, 60, 50, 40,000? That's up for you to decide. In terms of the actual price of Bitcoin, we'll get you some analysis on this. We've got the web tease as well. I'll tell you about that in a few moments' time. But the fact of the matter is, I don't know where Bitcoin is. I've always stood by the fact that I don't know if it's worth 0 or $1 million per Bitcoin as well. Some of you lot out there clearly know the exact price as well. But should it be part of your portfolio? That is above my pay grade. Bitcoin may be trading an all-time high, but traders still think it's room to run, funnily enough. When we say that, by the way, those traders are almost inevitably long the product. So just the big caveat you should always have when you watch CNBC. Anyone telling you anything, and that is a metaphor for life for you, by the way, as well. Anyone telling you anything probably has a position or a view already, all right? But you can find out why the traders who may or may not be long the Bitcoin already think it's got further room to run. You can find that story on CNBC's website. President Biden will meet Donald Trump in the Oval Office on Wednesday to kick off the transition of power. Biden pledged to a peaceful transfer of power, calling on the country to, quote, bring down the temperature. Trump reportedly spoke to the Russian President Vladimir Putin, according to Reuters and the Washington Post, which both report that the president-elect told Putin not to escalate Russia's war in Ukraine. Ukraine's foreign ministry said it wasn't told about the call in advance and said reports that it knew are false. Coming up on the show, China's deflation problem isn't going away, with new figures showing factory-gate prices falling faster. Plus, Olaf Scholz opens the door to conversations on a confidence vote before Christmas. as the collapse of his governing coalition sends shockwaves through the continent's largest economy. And don't miss our conversation with Hannover Re as the company posts third quarter earnings. So we'll be back after a short break. Welcome back. TSMC has reportedly told Chinese chip design companies it will no longer manufacture some of their most advanced AI chips. Wow, according to multiple outlets. The United States reportedly ordered TSMC to halt exports of advanced chips to Chinese customers as Washington looks to restrict access to the critical technology. Extraordinary. Lots going on in Asia, actually, both in Japan and China and all over, actually. So let's have a look at the Hang Seng. That is under pressure. Stocks leading declines. I mean, not a huge amount, but it's 1.7% lower. After stimulus measures from China underwhelmed investors, Beijing unveiled a 5-year debt package worth 10 trillion yuan on Friday, aimed at tackling local government debt issues. But it's the same story. Yeah, bail out the local governments, but what about the consumer? You bail out the local governments, you can't make the consumer spend. If the consumer's going to be the driver, that's where a lot of people think the focus needs to be, because the consumer has its problems. Look at this. Consumer prices in China rose at their slowest pace in 4 months in October. Producer price deflation deepened elsewhere as well. Sam has been leading our coverage on all of these issues and joins us now. In fact, we're going to first, of course, Sam, talk about China, and then we're going to get you back to talk about Japan as well. But start off on the former. Nice to see you.
Hello. Yes, of course, we got the much anticipated 10 trillion yuan for the local government debt swap, as you say, Steve. So that was off the back of this highly anticipated meeting by the NPC Standing Committee, which really had investors on the edge of their seats last week and had the markets guessing for that magic number. The disappointment, as far as some of the analysts and economists are concerned, seems to stem from the fact that this only goes to address, as you very clearly pointed out, the eye-watering debt problems that the local governments have. The estimates put this at some 50 to 60 trillion yuan, which translates into about $8.5 trillion. So we know that they have borrowed a lot off the books to support the infrastructure build out, etc. They've had a tough few years of zero COVID. And then, of course, we've seen that businesses have not been repaid. Civil servants have had their salaries cut. They've had their jobs cut as well. So all of this seems to be to try to manage financial risk here. And hopefully these local governments, with the help that the government has announced now, can actually pay back some of the banks and pay back some of these businesses and get things going now and try to make people feel a little bit more confident about the health of these local governments. And hopefully that will make a sort of positive feedback loop into the real economy. Because as you say, all of these things are also deflationary, because if you don't feel good about your long-term income expectations and your job, you're not going to go out and spend your money. And that's sort of what we're seeing with regards to consumer demand as well, with regards to the CPI print, the sticker prices coming in below expectations, 0.3% on the headline. That was the slowest reading we've seen since June. And that's despite the fact that even during my trip to Beijing, I did see sort of these sort of green shoots. Confidence does start to seem to be coming back. So it does look like this continues to build the case now for more stimulus. What is giving the markets hope today, though, Steve, is the fact that the finance ministry said, don't worry, it's coming. But the thinking here is that we have to wait for the next sort of economic meetings, one in December, and then, of course, the Parliament sitting in March for more clarity on what that's actually going to look like to address consumption, and particularly after Trump gets his feet under the desk at the White House and that trade policy becomes a little bit clearer. And that's perhaps when we'll start to see something from China of how to build some immunity or a buffer against any of that.
Yeah, absolutely. And that is obviously the key unknown at the moment. I'm glad you were paying attention earlier. I noticed your face and the dismay when I mentioned you were talking about Japan. Of course, you're not talking about Japan. I knew that. I was just testing. You're talking about Singles Day, when it is officially Singles Day. What started as a one-day event has morphed into a month-long shopping festival, kicking off on October 14th this year, more than a week earlier than last year. Sam, what do you want to say about? I'm just reading of the history of Singles Day. It's all about the numeral 1, isn't it, and the bear stick and what have you. Should I be not shopping during this period in case my wife gets annoyed that I'm shopping on Singles Day?
No, I think you should definitely go. I mean, you've got a whole month to do it anyway, as you pointed out, because it's gone beyond just one day. It's now this sort of weeks-long marathon, and I'm sure there's a few single people in Japan, so we can bring that angle in too. But, you know, time and time again, this event comes around, and I try to look for something different. And so it was good that I was actually in Beijing this last month, because I've been tracking a few consumer trends over in China and also business trends over the years, and I sort of wanted to see it for myself. So I got a chance to speak to a couple of businesses, given the tough economic backdrop right now, as I've been saying with all the data, who don't really want to be sort of forced by these e-commerce behemoths to juice up their numbers for all these shopping festivals, because of course they've got to protect their own bottom line. So they've been sort of telling me that, you know, they're not cutting their prices, they're not actually offering big discounts during these big shopping festivals because they want to see steady sales all year round. So it's an interesting sort of situation happening at the merchant level. But then also you've got with the consumers, yes, we know that they're tightening their belts. We know about the consumption downgrade and the trading down. But the companies, what they're doing, because remembering this is an Alibaba event, right? And then JD has also taken it on. But Pinduoduo has become really, really critical competition here. But now it's even more interesting. You've got these social platforms like Xiaohongshu or Douyin, China's version of TikTok, which have now integrated e-commerce into their platform, and they're taking some market share as well now, Steve. So, you know, if you are watching your favorite influencer, for instance, and you like the product that they're promoting, you can just click on it. It's a one-stop shop rather than having to close down your browser and go into another site. So you can tell your wife, she can get on that as well. It's a new trend.
I will, and I'll be looking at my favorite influencer when I find out what an influencer is. I've got to be careful on the wife jokes, actually, otherwise there'll be one extra single person in East Sussex. So I'm going to drop the wife jokes for now. Now, in fact, hang on, I'm safe. She's not up yet. That's fine. I can do as many as I like. Thanks for that, Sam. Better move on. Back to Japan, because she's not talking about it, so I better do it. Japanese Prime Minister Shigeru Ishiba is set to face a leadership vote today, after his coalition lost its majority in Parliament last month. Ishiba is expected to survive the vote and run a fragile majority, facing challenges ranging from pressure to cut living costs to rising tensions with China and North Korea, and protectionist policies potentially from the United States.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Gumete, weekdays on CNBC.